Welcome everyone to this truly exciting and potentially game changing discussion. Today, we are diving deep into a topic that's setting the financial world all right and promise a massive shot in the arm for one of the world's fastest growing economy. We're talking about the US India trade deal, an agreement that, according to report, is very close to being finalized. And why is this so significant? Because exports are projected to increase, and many people are saying that this deal could inject staggering $10 billion directly into the Indian market. And that's not just a number, it's a monumental boost. And we are going to break down exactly what it means, why it's happening, and who stand to benefit the most. So let's cut straight to the chase. What is the primary mechanism behind the projected $10 billion market boost? The answer is simple and yet powerful, and that is the tariff cuts. For years, Indian goods entering the United States have faced a range of import tariffs. These tariffs act like a tax, making Indian products more expensive for American consumers and businesses, thereby reducing their competitiveness. Current reports suggest that the US is poised to significantly reduce or, in some cases, completely eliminate these import tariffs on broad range of Indian exports. Think about it. If a product from India currently faces a 50% tariff, a reduction to say 15 to 16% makes that product drastically more affordable and attractive overnight. This isn't just a marginal adjustment, it's a seismic shift in pricing strategy for Indian exporters. The mere prospect of these cuts have already sent waves of optimism through both the Indian and the global markets. Companies that have long eyed the lucrative American consumer base are now seeing a clearer, more profitable path forward. Investors are recognizing the immense potential for growth in sectors poised to benefit directly. It's a palpable sense of excitement and energy that we haven't seen around US India trade in quite some time. This deal isn't happening in a vacuum. It's a culmination of years of negotiation, strategic alignment, and evolving global dynamics. So, why now? Firstly, from the US perspective, the the strengthening economic ties with India is a crucial part of its broader geopolitical strategy. As a counterweight to other rising power, fostering a robust economic partnership with India, with basically India as the world's largest democracy, makes immense strategic sense. It diversifies supply chains, enhances regional stability, and creates new markets for American goods and services in future. Secondly, for India, this deal aligns perfectly with its Make in India initiative and its ambition to become the global manufacturing hub. Reducing tariffs on its import or exports to one of the world's largest consumer markets is direct pathway to boosting domestic production, creating jobs, and driving economic growth. India is eager to move up the global value chain, and easier access to the US market is a vital step. Thirdly, both nations recognize the mutual benefit of the enhanced trade. The US gains access to a rapidly growing Indian consumer market for its own product, while India sees its domestic industries flourish. It's a classic win-win scenario that has finally reached a critical juncture. The shared democratic values and increasingly aligned strategic interest provides a strong foundation for this economic partnership to deepen. Now, for the critical question for the business and investor, which specific sector within India are poised to see the biggest windfall from these tariff reductions, while the full scope of product covered is still being ironed out? Report consistently highlight the several key industries, starting with textiles and apparels. This is a massive sector for India, employing millions. Historically, Indian textiles have faced significant duties in the US. A reduction here could make Indian garments far more competitive against the rival, leading to a surge in orders and production. Think about the impact on smaller manufacturer and large textile houses alike. Next is pharmaceuticals. India is often called the pharmacy of the world, producing vast quantity of the generic drugs. While many of the raw material and the finished products already have good access, any further reduction in tariff or streamlining of regulatory process would be a significant boon, cementing India's role in the global healthcare supply chain. Next is engineering goods. From industrial machinery to auto components, India's engineering sectors has a strong export capability. Lower tariff would open doors for more complex manufactured goods to enter American market, fostering innovation and advanced manufacturing in India. Next is gems and jewelry. India has a rich tradition in diamond cutting and polishing and the jewelry manufacturing. Reduced tariff would make these exquisite products more affordable for American consumers, potentially boosting exports significantly in this luxury segment. Next is agriculture products. Well, it is still potentially being discussed because we know that this is the Achilles heel in this whole agreement. While the negotiations around the agriculture can be trickier, any easy access for certain Indian agriculture products could also contribute to the overall export growth. And we will dwell now into the reciprocal side of this in a moment. Well, this isn't an exhaustive list, but it gives you a clearer picture of where the initial wave of growth and investment is likely to be concentrated. For our investor audience, understanding which sector benefit is just the first step. The next is figuring out how to ride this wave of optimism and the potential growth. The immediate effect of such a deal is often a surge in the market sentiment. Investors anticipate higher revenues and profit for companies in the beneficiary sector, leading to increased stock prices. We have already seen this play out with reports of deal nearing completion. Next is the export-oriented companies. We must keep a close eye on the Indian companies that generate a significant portion of their revenue from exports to the US. This will be the direct beneficiary of the improved margins and increased demand. Research their current share in the US and capacity for expansion. We also have to look at the logistics and infrastructure. A surge in export means a greater need for efficient logistics, shipping, and port infrastructures. Companies involved in these areas could also see an uptick in the business. And now also foreign direct investment, also known as FDI. The improved trade relationship could also encourage more Americans and international companies to invest directly in India, setting up manufacturing units to leverage lower production cost and tariff-free access to the US market. This brings with job creation and technology transfer as a byproduct of the growth in logistics. However, a word of caution: while optimism is high, it is crucial for investors to do their due diligence. The specific terms of the deal, the implementation of timeline, and the ability of companies to scale up production will all impact the actual realized gains. But the underlying trend is undeniably positive. Now, a trade deal is really a one-way street. For India to secure these significant tariff reductions from the US, there are naturally concessions that India is expected to make. These negotiations are complex and often involve sensitive domestic industries. One of the key areas where India is expected to open up is in agriculture imports. Specifically, reports suggest that India might ease import duties on quotas on certain US agriculture products, such as corn or soya meal. This benefits American farmers who gain greater access to massive Indian market. Another sensitive area, though not directly a tariff issue, often linked to the broader US India discussion, is related to India's energy import. While not a direct part of this trade deal, tariff discussion, the geopolitical context, and the India's diversification of energy sources, including from Russia, can sometimes be a background element in the broader diplomatic relationships. The US often encourages allies to reduce reliance on certain energy suppliers, and this could be part of ongoing strategic dialogue. The art of trade negotiation lies in the finding a balance where both sides feel they have gained significantly. India's negotiators would have worked hard to ensure that while making concessions, the overall benefit from increased exports vastly outweigh the impact on domestic industries due to increased imports. This reciprocal opening of the market is what truly defines a bilateral trade agreement. This current trade deal, while significant on its own, is also a crucial stepping stone towards a much larger ambition to double India US trade to staggering 500 billion by 2030. Lot of This is a huge sum of money. Think about the implications of that target. We are not just talking about the minor adjustment, we're talking about a fundamental reshaping of the global trade flows and dramatic deepening of economic ties between two of the world's most influential nations. Achieving $500 billion target will require more than just tariff cuts. It will demand continued policy alignment. Both nations will need to work continuously on streamlining regulations, improving ease of doing business, addressing non-tariff barriers to trade. Infrastructure development is the second pillar. India logistics and port infrastructure will need to rapidly expand and modernize to handle the increased volume of trade. Beyond goods, trade in services and technology will become increasingly vital. Partnership in areas like AI, cybersecurity, and green technology will define the next phase of this economic relationship. Strong economic ties are also always bolstered by robust educational exchange, tourism, and cultural understanding. This $10 billion boost is just the beginning. It's a powerful signal of intent, laying the groundwork for a sustained period of growth and integration that could transform a global economic landscape. Beyond the immediate economic benefit for the US and India, this trade deal could have a broader implications for the global trade and the trading systems. In an era where multilateral trade agreements have faced challenges and protectionism sentiments have sometimes risen, a successful bilateral deal between two major economies sends a powerful message. It demonstrates that mutually beneficial trade agreements are still possible and can drive significant economic growth. This deal could serve as a model or an inspiration for other nations looking to forge stronger economic partnerships. It highlights the strategic importance of diversified trade relationships and the potential for cooperation even amidst complex global challenges. It also reinforces India's growing role on the global stage, not just as a consumer market or as a sourcing destination, but as a significant economic partner capable of driving international trade policy. The world is watching to see how this partnership unfolds, and its success could indeed set a precedent. So to wrap things up, the US India trade deal is more than just an agreement about tariffs. It's a testament to strengthening strategic ties, a significant economic opportunity for India, and powerful signal of confidence in future of the global trade. The projected $10 billion market boost is headline figure, but behind it lies the potential for millions of jobs, increased prosperity, deeper integration between two vibrant economies. Whether you are an investor, a business owner, or simply interested in how the world economy is evolving, This is a story that demands your attention. We'll be sure to keep you updated as more details of this landmark deal emerge. What are your thoughts on this potential trade agreement? Which sector do you think will benefit the most? Let me know in the comments below. And don't forget to like this video if you found it informative. Subscribe to our channel for more in-depth analysis of global economic trends and hit that notification bell so you don't miss out on any of our next update. Thanks for joining live. Thanks for watching. We look forward to seeing you seeing this exciting development unfold between US and India. I'll catch you again in the next one. Until next time, bye for now.